Safaricom declared their dividends on 13th Feb this year, and this is how much 20,000 is going to get you as dividends. First of all, I want to show you what you can take advantage of in terms of getting these dividends as a new investor. We have the announcement date. This is the date that they say, okay, on this specific day, we will pay out these dividends. For Safaricom, they announced on 13th Feb that for every share that you own, you're going to earn an interim dividend of 0.55. So if ever there's an interim dividend, there's a final dividend. So in this case, we have two dividend payouts. The first one, so now that we already know what the first is, later on in the year, we're going to know the final dividends. Now, the book closure, this is the date at which, if you are in their register, you are qualified to get the 0.55 dividend. And we have the payment dates. This is the date at which you're going to get the dividends. Now, remember you have 20,000 Kenyan shillings and you want to invest here. One thing that you must take note of is the book closure dates. If you are in their books by 3rd March 2025, you'll get this dividend. So it doesn't matter whether you bought your shares last year or the other year, or if you buy them today. As long as you are there by 3rd March, usually it's not even 3rd March, it's a date known as the ex-dividend date, by which if you're not, it's the ex-dividend date, which is usually like 2 to 3 days before the book closure date. The book closure date is the date that they are looking at their financials. They've looked at the profits that they've made. They have confirmed that you are in the register for somebody who's eligible to getting dividend. So 2 days or 3 days prior to this, for most, is the ex-dividend date. I forgot to add it. This is the most important date. You must be registered as an investor in Safaricom. Today is 25th Feb. So if you buy your stocks tomorrow, that is 26th, and you are on their register, so by around there, 1st March, if you're there, in as much as you bought your stocks on 26th, on 27th, you're going to get the 0.55 that is going to be paid on 31st March, later on next month. So that's something that you can actually take advantage of. You can always buy stocks in companies that have already announced their dividend payouts. So you buy them late because you're still going to get the dividends. Anyway, you have 20,000 Kenyan shillings. Today, when you check the Nairobi Securities Exchange Market, the stock market, the price for Safaricom was going for 18.30 shillings. Assuming that you want to buy 1,000 shares, it's going to cost you 1,000 shares that you're going to buy times the price of the share. In this case, it's going to cost you 18,300. So this is how much you need to buy 1,000 shares. Remember, you have 20K. There's usually a broker fee. Every stock broker that you're going to choose is going to charge you. It's usually a percentage ranging from 1.5 to 2.5%. So the one that I've used is for an actual stock broker here in Kenya that charges you 2.1%. So 2.1% times the total value that you're going to buy these stocks, it's going to be 384. So this is the fee that you have to pay for using a broker. You must have a stock broker. You can't do without them. So when you add up 18,300 plus the fee that you're supposed to pay, you need 18,684. What you can do is that you can transfer like 20K. Just have something excess in your stockbroker account, in your CDS account. In terms of how much you're going to make as dividends, remember, Safaricom has said for every share that you own, you're going to make 0.55. You bought 1,000 shares. You bought 1,000 shares. You are already in their register by 3rd March, so you're going to get this dividend. If one dividend is 0.55, what about 1,000 shares? You're going to receive 550 shillings deposited to your CDS account. So this is the dividends. Okay, you might say For 18,600, I only make 550. This is because you have less shares. Imagine someone who has 10,000 shares. 10,000 shares, it's going to cost them around 183K. So they're going to make 5,500. Remember, this is just the first dividend. The second dividend has not been paid out. So ideally, you would make double, because they usually pay out around 0.6, 0.65, 0.7. You can go up there. So let's just assume it's going to be double the final dividend. This is just the first round. The second round, you're also going to make this or more. Do you think that the return is less? Because other than the dividend, and you thinking that you're making less, if the value of this share goes up, I'm just saying, if it goes up to 19 and you sell these shares, you're going to make good money. You're going to make good money. Anyway, the more the shares that you have, the more the dividends that you make. That's just the rule of thumb here. You're going to make 550. Dividends are taxed 5%. So in this case, we take away 5%. In actual sense, you're going to get 550 times 0.95. This is after tax. This is how much you're going to make. Yeah, this is how much you're going to make with 20,000 Kenyan shillings. You're going to make this dividend times payout. And this is the first dividend. You can make another one. I have included another company here, East African Portland, because I wanted to show you the difference in terms of these dates. These dates are very important. We have another company that is listed in the stock exchange market. East African Portland announced on 28th Feb, that is last year, or rather 28th November last year, that they are going to be paying out dividends. I think it was 1 shilling. Yeah, 1 shilling per share. For them, when you check, they say it's the first and final dividend. So there's no other dividend. At least for Safaricom, we know you are going to get another payout. But they announced on 28th Feb. This is just an announcement, them declaring. They said that they are going to close their books by 31st December 2024. So you must be on their books by then if you wanted to make this 1 shilling per share. Remember, there's the ex-dividend date, the date at which you can't earn dividends past that date. It's usually like 2 to 3 days prior to 31st December. So probably it's 28th, it's on 28th. It depends. You must be there by here for you to get that 1 shilling. Look at the payment date. It's on 31st March 2025. So these guys have to wait 3 months to receive their dividends. 3 months. Because they're going to get their money on 31st March. Whereas for Safaricom, they're closing on 3rd March. And by the end of March, they're paying out. So for them, it's 1 month. It depends on the company. For certain companies, it's 3 months. For some, it's 1 month, as you've seen. So take note of this date, book closure date, because for Safaricom, today is 25th. You can still buy the stocks tomorrow. You're going to be in their books. In as much as you buy the stocks tomorrow, you're still going to get this dividend. So for dividends, the time factor doesn't matter as long as you are in their books. Thank you for watching this video. Like it if you found it insightful. See you in the next one.